Dennis Dycus talks about two of his favorite frauds. Dennis is a certified fraud examiner, or CFE, with extensive experience auditing governmental agencies. The Association of Certified Fraud Examiners was established in 1988 and is based in Austin, Texas. The professional organization has approximately 29,000 members who are dedicated to fighting fraud. Each CFE must undergo a rigorous qualification process.
CFEs come from various professions, including auditors, accountants, fraud investigators, loss prevention specialists, attorneys, educators, and criminologists. CFEs gather evidence, take statements, write reports, and assist in investigating fraud in its varied forms. CFEs are employed by most major corporations and government agencies, and others provide consulting and investigative services.
As a CFE, Dennis has been exposed to numerous fraudulent situations. He joins us today to share some of his war stories and to provide practical advice for all auditors. Now let's join Jack as Dennis recounts two real doozies.
Dennis, this subject is one that just fascinates me, and you are the great teller of grim fairy tales. Only they're not fairy tales, are they? They're truth.
They're horror stories.
Can we start with one that you shared with me, the city of Rockwood?
City of Rockwood, Tennessee.
What happened?
Well, I got to paraphrase what I'm fixing to say, because a lot of people say, you just make this stuff up. I don't have to. It's reality. It really happens. And a lot of people say, oh, you know, I just don't believe that. Well, that's the reason they fail to detect fraud, because they don't believe that people will do what they've done. If you don't believe somebody will do it, you don't anticipate they can do it right in front of you and never see it, because you don't think they'll do it. But anyway.
A crime in plain sight, huh?
Crime in plain sight. If you're going to steal, I always tell people, if you're going to steal right up in the open, because nobody anticipates that. If you try to hide it and sneak it out the back door, they're going to be watching the back door, but they're not going to be watching the front door. So just walk out in front of them, and they'll never know it. They'll never know it. But anyway, Rockwood, Tennessee is a little city in East Tennessee. They had a treasurer, or city recorder, that had been there 30-some-odd years. He was a very well-liked individual. He was active in the community, treasurer at the church, played the organ at the church, but he's embezzled over $465,000. And he did it in a number of ways. But one of the neatest ways that he did was using non-reoccurring sources of revenue. Now, a non-reoccurring source of revenue is a revenue from someplace that you're not expecting it.
Okay.
For instance, if you have a police force and somebody wrecks one of the police cars, it's insured. How many people is going to be looking for that insurance check? Not many. Right. Because the police department, they're not going to get it. They don't even know if the cars are insured. You know, they just want another one. So the chief financial officer, the city recorder, is the one that's going to be looking for that insurance check. What if you do well on your workman's comp claims and you get a rebate? Who's going to be looking for that check?
I assume the city treasurer is the
city
recorder
treasurer.
again.
They're the only ones that knows it's coming. Same thing on any other similar insurance type policy. How about your business tax? Now, business taxes in Tennessee is a tax that local governments have the option of adopting. It's a very small tax. A lot of them, most of them, do not have a good enforcement program. So if a business pays the tax, they'll take it. If they don't, they're not going to come after them. So that business tax is not recorded as a receivable on their books and records. So if it comes in, we'll take it. But are we expecting a particular check from a particular business? No, not necessarily. So these are all non-reoccurring sources of revenues. If the person that's in charge, if we have a person in charge of making the deposit, taking the deposit to the bank, and opening the mail, that's all we need right there. We talk about opportunity. What Mr. Butler would do is he would open the mail, and he would get the checks in the mail from non-reoccurring sources of revenue. He'd just hold them. He wouldn't do anything with them. He'd just hold them. The people that prepared the deposit, he didn't prepare the deposit, but he made the deposit. The prepared deposit would come to him, and let's say he had $1,000 in non-recurring sources of revenues here.
Right.
He would simply take $1,000 in cash out of the deposit before he took it to the bank and substitute with checks. Now the deposit would still balance. The books would still balance. The same amount of money would be going in the bank as it's supposed to, checks and cash, but not in the same proportion. If you ask the bank to
Now,
give
he endorsed the checks over to the city.
endorsed the checks for, for deposit only. They just were not receipted.
Got it.
They were never officially receipted in the books and records. So if you looked in the books and records, there's no record of those checks ever being receipted. And the only way that you can determine what happened is ask the bank to give you a makeup of the deposit. And if you get a makeup of the deposit, and of course they have to itemize deposits, and that's one real good reason you need to itemize deposits to be able to determine what went to the bank. It's what's on the deposit slip, cash and checks, is that what went to the bank? We asked the bank to give us an itemization of this one deposit and say the deposit said it had $1,000 cash and $1,000 checks. Came back, it had $1,500 worth of checks and only $500 worth of cash. Well, what does that tell you?
Somebody substituted.
Somebody
checks.
substituted $500.
Is this part of your normal audit process, or was there something that triggered that you would go to the bank and ask for this makeup?
If you have the opportunity, if you have a person with that opportunity, you need to determine if they took advantage of that opportunity. You don't know whether they did or not. But so we always pick 3 or 4 deposits, depending on the situation as to how many, and ask the bank to give us a detail of those deposits. Now, so that was one way Mr. Butler stole the money. A second way is he would write out a check to the Rockwood Police Department for $1,000.25. Now, I'm going to give you a copy of that check, and I hope you can use it as a handout here or show it on the screen. But an auditor should have questions about that check immediately.
Because it's a strange amount.
Well, not only that, but who is the Rockwood Police Department? Have you ever met anybody named the Rockwood Police Department?
Well, but it's the organization.
Well, why would an organization want cash? If a city is going to pay a police department bill, that's just part of the operation of the general fund, public safety.
True.
So the city recorder would just write a check to the vendor. Why would the police department need cash? Can you think of a reason?
I can think of one reason.
All right, what's that?
To make a purchase of illegal drugs or
All
something
right.
else. They need cash to informants.
I thought you'd say that. The check was for $1,000.25.
That's what bothered me, was the 25 cents on the end.
So the police, if Mr. Butler gave us that excuse, well, you have to ask yourself, does it make sense? The policeman came in and said, I want some buy money. We're going to have a drug buy tonight. I need $1,000.25.
That's the tax.
It just doesn't make sense. So we had the check, and it came back in the bank statement, and it was written void on it. But you could clearly see it went through the bank. First of all, it's in the bank statement. And you can see where it was processed on the bottom right-hand corner for $1,000.25. But it was written void across it. What's your question?
What happened to the $1,025?
Yeah. What happened to it, and why did you write void? Well, Mr. Butler says, I know it's not really voided. That's just to tell me it was a wash. See, the police chief came in and asked me for some cash, need $1,000.25. And then he came back and said, I don't need it. Well, I was going to the bank, so I just went ahead and cashed that check for $1,000.25. But I redeposited it. And here's my cash ticket from the bank. And you look at the cash ticket, the check was cashed at 9:20. The cash ticket shows a deposit going to that same bank account at 9:21 for $1,000.25. So you have the check that shows it was processed, it was cash, and on the back of the check it shows cash checked. Okay?
Yeah.
Date and time.
Yeah.
You have the cash ticket, which ties to the bank statement. $1,000.25.
1 minute apart.
Pardon? 1 minute apart. So
it sounds like he did put it back in.
Sounds like he did, eh? But I got one question. Does that make sense?
I don't know why you do it. That's my sensical question.
Why would you do that?
If you didn't need the money, why not just void the check and not
that's right.
run it through?
Now, you have assumed, if you believe this, you have assumed something. And, of course, assuming, as I've talked to you on several programs, is the most deadly thing an auditor can do, is assume anything, even the most obvious. Now, do you know what you have assumed?
I've assumed that the money that he put back in is the money he took out.
That's correct. And you know what?
It wasn't.
You're wrong. That's correct. Non-reoccurring sources of revenue. This is another way he can use them. He can cash that check for $1,000.25.
He kept the cash in his pocket and put in the checks.
Put in the checks. And the reason that check was $1,000.25, That is what his 3 checks from non-reoccurring sources of revenue added up to. So that's why the check was for $1,000.25. So he just switched. And you assumed that he put that same cash back in the bank. So you may tell yourself, well, you know, that's a squirrely story, but I've got my documentation. So I'm hanging my hat on the documentation. And if I've said in the past, documentation doesn't mean something happened. It means somebody said it happened. Now, you're to ask yourself, does that make sense? And if it doesn't, you better follow through and ask that bank, what made up that deposit? Was it the $1,000.25 of cash, or was it non-recurring sources of revenue? And the parks director at this entity was friends with Mr. Butler. Now, in the summertime, this entity operated a large recreational program, swimming pool. They had baseball leagues and so on and so forth. Had lots of cash coming in. Very little receipts, very little internal control, because the cash was coming in from so many sources. Do you think there would be much risk in that area?
I would think that a lot of cash floating around is a high-risk area.
That's right. And because of the nature of cash, you know, we have to look at qualitative and quantitative aspects with regard to materiality. Do you think you might just go as an auditor and just take a peek down there and see what's going on?
I think I certainly might.
Well,
take a stroll down to the park.
Well, we have a quote from the park director saying, you know, I heard about the auditors, that they were here once in a while, but I've never seen one. So he stole $15,000. He emulated Mr. Butler's behavior because he had some idea of what Mr. Butler was doing. So it's good enough for the leader, Mr. Butler. It's good enough for him.
Tone at the top.
The tone at the top. Exactly right.
In this case, I think there's also a blind trust.
Well, number one, why did this happen? Why could this happen? And when it was so obvious, after it was all said and done.
I see what you're saying. It's not a blind trust. It's blind trust
the connotation of words.
Because I was thinking he set up some kind of scammy thing.
He didn't set up any blind trust.
Everybody just believed.
Oh, we trust him. For instance,
Faith.
the bank would cash checks for him, made out to the city, and give him money back. That was a violation of bank policy. That cost that bank, well, they were sued for $400,000, but they ultimately settled for about $86,000. That was against bank policy.
How long did this fraud go on?
We only looked at it for a period of 18 months. He was there for 31 years.
And it was $400,000 in 18 months?
About $460,000. And the odd thing about this story is he was scammed. He didn't spend hardly any of the money for himself. He gave it to a cohort, trying to, quote, help his cohort out. His cohort told him that he had won a large workman's comp suit, and it had been appealed all the way to